Hi, this is Moresh, and today we are going to talk about the upcoming DeFi boom and how you can profit from it. The DeFi boom is has been actually going on for the last couple of years, and most people are not even aware of it. They think that Bitcoin was blockchain, and that's they think of ICOs, etc., and that has left a lot of bad taste in their mouth. But I'm here to tell you that uh, just like after the crash of the dot-com era, real companies picked up the pieces and actually started building things. That is exactly what is happening right now, and the real boom is just about to start. Now, today we are going to talk about something called as platform governance tokens, and we are going to discuss a specific token briefly called comp. If you don't know about comp is a token which is used for the governance of a protocol called compound, and it has boomed uh, quite significantly in the last few days. It's already has a valuation north of $1 billion. Last I checked, it was around $1.6 billion, and they did it without listing it on any exchange or any centralized exchange in particular. So this is a completely different ball game. But before we jump into how this is such a big deal, let's talk about what it is not and how it differs from that notorious thing we all know called ICOs. Now, ICOs in the 2017-2018 era left a bad taste in a lot of people's mouth, and people started thinking that that is what blockchain is all about. But the reality is, that ICOs were never really structurally meant to do what people thought they would do. To give you an example, ICOs were basically sale of what they used to call as utility tokens. So, for example, let's say I want to build a casino and I don't have money to build my casino. So, what I do is I mint some chips. Let's say these are my casino chips, and I sell these in advance to potential punters. And the punters can then use those chips in my casino once it's built. Let's say each chip was worth $1 use. Now let's consider a few scenarios. Now the first scenario is a worst case scenario where I don't get the necessary permissions and I never am able to build my casino. In that case, these chips are exactly worth zero because they can't be used. And that's what actually happened with a lot of these platforms. They were selling you potential use of their platforms once they were built, but most of them actually never even got built. So those tokens are worthless, or they never really achieved the traction. So those tokens are quite worthless. Let's consider another scenario where the casino is actually built. Okay, in that case, how much will $1 chip be worth in that casino? The answer is it's only going to be worth $1. It only is going to get you a utility value of $1. Even if the casino is built as expected, uh, that chip is only going to be worth $1 in that casino. Now let's consider another scenario where it's the casino is brilliantly successful. So let's say the casino is very successful, and you have many casinos now. They are a part of a chain. Let's say it's Trump casinos or something like that. In that case, your chip can be used in many different casinos and you can play more games. Now, how much is your chip gonna be worth? Even if the casino did everything they said they would do and it's very successful, you can play many games. And the answer to that is it's going to be exactly $1. Yeah. So, long story short, uh, even if the tokens were sold in advance, okay, this is the time axis and this is the value axis, and if the casinos were have a utility value of X dollars and they were sold, let's say, at around this value in advance, then if the performance of the platform doesn't is not as expected, this is what your value is going to look like. But even in the best case scenario where the performance of the platform is as expected, your value is always going to be only this much. Let's say those tokens were sold at a discount and they were sold at 50 cents. Then maximum, this is what is expected to happen. And what exactly happened when these tokens were sold? That is what happened. And that is what people continue to believe will happen. And to some extent it did happen, but the people in the know knew that was not going to continue. So they basically sold it all. And this is where roughly a lot of retail small mom and pop guys ended up buying, and they thought, this is where they bought, or this is where they bought. They thought it would go there. Actually, you can't buy there. But most ICO tokens are worthless, okay? The sooner you realize it and crystallize your losses, maybe get some tax benefits out of your losses, the better it is. Because the performance of or the platform, even if in the best case scenario, would never reflect in the value of your token. Now, platform tokens are a completely different ballgame. Number one, because they are not just about using those tokens inside the platforms. They are much like equity. Okay. So if the platform tokens are almost like equity. I like to call them quasi-equity because that's what they are. In fact, to a large degree, they are actually better than equity because they don't technically come with a lot of compliance, which is involved in an IPO. So the cost is much lower, and they are also globally liquid from day one. So they are everything that STOs claimed they would be, but they are actually far better. So if the platform does well, then you do get an upside. So usually what happens is portion of the revenues of the platform go into a pool, and that platform token holders have a claim on this pool. So the bigger this pool gets, the more revenue this attracts, the more valuable your token is. Okay. So depending upon the performance of the platform, the value of your tokens can and does go up. So this is actually how things should have been done in the first place. So platform tokens are really are the real McCoy. Now the second thing is platform tokens also give you a vote, which means that you can participate in the governance of the whole thing. So you can participate in what features the platform will have, what it can or cannot do, what the strategic decisions are, and that again brings it more closer to real world equity, unlike utility tokens in which the community did not really have a say at all. So that's another big plus over here. That's a big check mark. The next thing platform tokens have is most of them, or all of them really, I'm aware of, they are not using the money for development. Okay. So these are already completely built platforms. They usually have a few users, they have traction, which means that the risk has largely been taken out of the equation. We are not really spending, they are not really asking people to join or give them money to develop something. So to some extent, that is actually even better than equity, because equity is often used to build something, whereas these people are really saying, okay, we have a completely built up platform, and here are platform tokens. So why would somebody do that? Why would somebody give away their ownership? There are two or three different reasons. Let's go through each one of them. The first one really is decentralization. So this is what happens when you use your iPad Pro for the first time. And bear with me over here. Okay. First is decentralization. Now, what really the intention is to give up the control of your platform to the community. Okay. And there are two reasons behind this. One is really the whole feel good factor of actually giving up ownership to the people who actually use it. But the second more practical factor is really compliance. The intention is really to achieve decentralization so that you are not captured under regulations, as most of these platforms are really some sort of financial product. So the sooner they decentralize, the more they can claim that they shouldn't really be regulated because there is no active management. Now the reality is, in the near term, most of these platforms are going to be dependent upon the actions of their founders, but a lot of them actually have a significant level of maturity so that the community can take over the governance of it. So the decentralization is a way to get away from compliance, or say ensure yourself from compliance, and also in that process capture some of the value. Because if you have, let's say, 1 million tokens and 100k were given to the community, and now they are floating on a decentralized exchange such as Uniswap, and their value is 1 million, then suddenly you are a $1 billion company. Because my numbers might be a bit wrong, but by putting out some amount of your tokens and then allowing them to float essentially means that the founders can actually capture some of the value. So it's an roundabout way to do an what is actually an IPO. Now the second reason is really incentivization of users. Okay, and this is very important, and it's very one of the biggest factors why there has been a rocket price growth in the performance of this comp token in particular, and that's going to happen again and again in the coming months. So what they are really doing is, if you perform a certain action on the platform, which is, for example, Compound is a money market, you lend tokens or you borrow tokens, and if you perform the actions which they want you to perform, then you get a certain token. Let's say this is the token which you get, and you're pretty much getting it for free. They are basically rewarding you. So it's more like reward or loyalty, and that actually means they are largely in the clear, because they are not really using the money to fundraise. They are really giving it away for free for you to perform certain actions which they want you to perform. So it's really, at least in Australia, and I would say in the US as well, they would not be afoul of any regulations, because in Australia you can run a non-cash payment facility without any limitations if you're just giving away rewards and loyalty. And because people are getting these reward tokens and loyalty tokens, and these loyalty tokens in a sense are linked to the platform's performance, more people tend to perform the actions that they want, and more people perform the actions which they want, which means the value of the token tends to go up because of the user behavior. And because these people are seeing that the value of the token is going up, more people want to do the actions which they need to do to get the tokens, and so on. So essentially what happens is, you see what can be best described as a curve which looks a little bit like this. Initially there will be rocket uh, like growth, and then eventually the incentives should sort of catch up. But within this period of time, okay, this period of time, there's a massive amount of money to be made. And what's going to happen in the DeFi space is, more platforms similar to Compound are going to start gearing up to launch their own tokens. I am aware of at least a couple of them, DMM, which is the DeFi money market. And we are also contemplating, we have the open token lending protocol. They are largely very similar, I would say. And both of them, in the coming days and weeks, we will see both of these, and beyond these as well, you will see more platforms, especially DeFi platforms, going down this path. So I'm very excited, and I hope all of you take advantage of this. Cheers. Bye bye.